Big week this week in the markets. Look at all these companies reporting. McDonald's opened this morning. They already reported. I'm going to get into that. Tesla's up big this morning. I will get into that. And 3M last week. Let's get into that first. 3M reported $1.93 per share in EPS, beating $1.68 and $6.02 billion in revenue versus an estimated $5.85. It went up 20% on Friday or Thursday or whatever day it was. Incredible. Now, 3M is a company I own. Don't buy a company merely because somebody on the internet owns it. We're here to teach a process that you can apply to your own investments. Am I happy they're up 20%? Yes. I mean, of course, I'm glad they're doing well. Does it faze me at all saying, yes, I was right? Zero. I'm going to feel I was right years down the road when my entire thesis plays out and the stock is hopefully much higher and or earnings and profit are much higher as well. That's what's key here. I don't make my decision based on short-term price movement. If for some reason the stock had fallen because it missed, would I feel like I was wrong? Not necessarily. That's what's so important with investing. You have to have that long-term outlook. McDonald's. Guys, here's what's interesting about McDonald's. Let's pull up McDonald's in our software. McDonald's is up almost 3% this morning. So obviously they reported great things. Not. Guys, they were expected to make $3.07 per share. They missed and reported $2.97. They were expected to do $6.6 billion in revenue. They missed that one at $6.5 billion. Now, the $5 meal deal crushed, and they said they're keeping it because of that. And the CFO said they're going to raise prices less this year. Well, makes sense because inflation has been subdued, so they're going to raise it less. Maybe that's what's driving up the stock price. I don't know, but a double miss, and the stock is still up 3% this morning. As you may know, McDonald's is on my list of companies I'd love to own. Guys, I basically go to McDonald's every morning and I get, why are you laughing, Tim? I go to McDonald's every morning. I get the burrito and I get a large Diet Coke light ice. I have 1 billion McDonald's points on my reward points. And you might think that's unhealthy, but it's the freaking tortilla and egg and all that stuff, and I love it, and it tastes so good, and that McDonald's Diet Coke is like crack cocaine to me. So guys, next on Tesla. Tesla is up big today. Why are they up so much today? 5.24%. Well, let's take a look at it. So guys, I'm looking at the news section of our site for Tesla, and I'm not seeing anything today that even happened to drive it up. The last news 12 hours ago, 12 hours ago, 12 hours ago. Here's 1 hour ago. Tesla just replaced Ford as Morgan Stanley's top pick in the U.S. autos. Okay, but robotaxi expectations are too high. Interesting. We've talked about that. ChatGPT predicts Tesla stock price. Okay, so a lot of news behind it there. So that seems to be the reason why Morgan Stanley just says it's the top pick for us. Guys, again, I've talked about this till I'm blue in the face. Tesla, to me, is a car company right now, has a lot of potential for a tech software business, but I got to see those revenues really start to come in and provide a material change in the business for me to give it that sort of blanket comment. Now, does that mean you don't value separate pieces of the company? Of course you do. Just like 3M. 3M's got how many businesses within it? You got to value it separately and then put it all together as one giant company. So guys, back to this. Some of the companies I'm looking forward to hearing about. Generac. We all know I love Generac. The stock has absolutely surged. Starbucks, PayPal, absolutely huge. 3 companies that I own. Again, don't buy them just because I do. Today after, Sprouts Farmers Market. Today after the close. Guys, I am seriously telling you right now, I hope Sprouts Farmers Market falls hardcore because I need it to fall so I can buy more shares. I know that sounds counterintuitive, and that's the first time hearing about this, but you want to have that mentality, follow this channel, subscribe to the channel. My goal is to get you, if you're not already there, on the path of thinking that lower prices are better. It's amazing to me that in investing, people love higher prices more than lower prices. But then we go out and brag about the car we saved $400 on, or we bought this shirt on sale. But when it comes to stocks, we don't like bragging about how we bought them on sale. Why? We feel wealthier when they go up. Of course, that's the reason. But if you want long-term wealth, you want these stocks to go down. I bought Sprouts in $31 to $33. It got up to $87. I don't know where it's at today, but I'm really hoping they don't do as well That way the stock falls. What other companies are out there that I have an interest in? Microsoft, obviously, will want to see that. AMD, see if they're doing anything in the AI space for their chips. Meta, obviously, love Meta. I don't own it anymore, but I'd love for it to fall so I can buy it. Oh, Paycom. I own some Paycom stock. Not a lot, but I order. Oh, Intel. My God, it's a huge week. Apple, Amazon, Intel, Crocs. Oh my gosh, for those of you who love Crocs. Just kidding. What else? Snap Inc. Not really caring. Eaton, Cleveland Company. Oh, Canada Goose. I want to see Canada Goose. It's a very high luxury brand. I want to see how they report on the consumer, because obviously we've been saying lately on this channel and on our main channel that I think the consumer is not doing as well as people think. So Canada Goose being a very premium company, very expensive company, a jacket from them is every bit of $700, $800 and higher. I want to see how they're going to report here. Oh, Mobileye, that's the spin-off of Intel. Coinbase, I'm sure they crushed because of stocks, because of crypto and Bitcoin being up so much. Okay, this is a huge week. This is like the Super Bowl of earnings. So guys, if you want to see us report on these companies, make sure you subscribe to the channel. That way you can see what is going on. Now, I want to update you on our stock market to GDP ratio, because new GDP numbers came out for the end of June, finally came through. I want to update that right now. Let me show you. Now, before we get there, this is related to the stock market GDP ratio. Yesterday on Twitter, I put a poll out. I love putting polls out there. So if you want to see me I love talking about investing, talking about life, all that stuff on Twitter. Follow me at @EMPaulG. I believe it's right here on the channel, @EMPaulG. Follow me there for my comments. Where will the S&P 500 be in 10 years? Under 5,500, which is basically today's price, about 9%. 5,500 to 7,000, 18%. 7,000 to 8,500, 24%. 8,500 plus, 49%. Now, one of the comments I thought was very interesting, which was, I thought, accurate, with how much money we're printing. He's like, I got to think 8,500 plus is obvious. I don't disagree with that. Now, do I disagree with these results? Yeah, a little bit. I'll show you why. But we're printing a lot of money. And when you print a lot of money, it's inflationary. And when you have inflation, you have GDP skyrocketing, okay? Stock market GDP is one of the best and most reliable metrics at any given moment to tell you where stocks are. Now, we had a recent update on our GDP numbers, but here we go. So as of right now, let me make this a little bit bigger. We had the GDP numbers updated to 28.63 trillion, which took our ratio down to 1.91, which is still 103% overvalued. I think we got to 113% last week or the week before then, and fair value of 2,700. Okay, now, you might sit there and say, Paul, that's really low. I know. Now, the 10-year PE ratio, which factors in just the earnings of the S&P, that's at 35.21, which is 106% overvalued and shows a lower fair value than before. So guys, whether you look at it from a stock market GDP ratio or a 10-year cyclically adjusted PE ratio, which are two very reliable metrics, we are massively overvalued. Does that mean 10 years from now we're going to be below? No, but let's look at history. Let's look at 2000. Back in 2000, the stock market, the 10-year cyclically adjusted PE ratio was at one point 150% overvalued. Look at the next 10 years of results, not including dividends, minus 6% return. Now, the last time they were at 100, look at this, 109%, it was minus 5% return over the next 10 years. Okay, let's go to the stock market GDP ratio. Back in 2000, we were at a peak of only 55% overvalued. Remember, we're at 105% or whatever it is, almost double. The next 10 years saw a negative 2% growth overall. So you look at this saying, okay, is it weird to think that we could see 10 years of no growth in the S&P? Based on this, yes. Now, is that for sure? No. Because the person, what I thought was a valid statement, said if we keep printing money for the next 10 years like we've been doing the last 3 years, I think that stock market is just going to soar. Will it soar as much as it has in the last 10 years? I doubt that, because every investment is the present value of all future cash flows. And unless those cash flows are absolutely huge, when you have overvaluation, you have to crush those cash flows to justify it. Is it possible? Absolutely. Is it probable? Remember, we're getting 5.2, 5.3% on a 90-day treasury. So in order to invest in the stock market and have a premium to that, what return do you need? 8, 9, 10%? Right now, we're not priced in for 8, 9, 10% returns in the market. It's just not there. Unless you have a very, very big growth in GDP and revenue and profit for these companies. That's possible. But where is that going to be driven from? I don't know. I still think it's a cautious time. Remember, though, I own 18 companies. I've been buying these companies for the last few years. I still have companies I want to own. In fact, on our main channel this week, we are going to have a video on the 5 companies I plan on buying in August. So make sure you follow that as well. That way you can get behind that. Guys, quick reminder, subscribe to this channel for updates 4 or 5 times a week on earnings, and follow me on Twitter if you want to engage with me there and see the things I write. I appreciate your time.